Understanding the DSCR loan requirements lender to lender is very important because they're going to have different minimum credit scores, down payments, and other factors that they qualify for you for their DSCR loan and loan program. DSCR loans fall into a category that's called a non-QM loan or non-qualified mortgage. They don't fall into the same guidelines and underwriting requirements as an FHA, VA, or conventional loan. Non-QM lenders can make exceptions on past credit events or how they calculate income for their non-QM products. So each mortgage lender is going to have specific terms and conditions for their loans. So always want to check your individual agreement and make sure that you're asking all of the questions that I have in my other training videos for 10 must-ask questions to ask your DSCR lender to make sure that you're getting into the best product and the best rate for yourself. Now, DSCR loan requirements and guidelines do change, and there may be lenders that offer other programs, so make sure you always speak with a DSCR loan expert before putting in offers in on homes so you can get pre-approved and know what your terms will be based on the current market, and that you know what type of properties that you should be looking at to make sure that they're going to ratio and meet the requirements. Now, as a broker, I have a lender list that has 100 plus DSCR lenders at close reach so we can find products that meet what you're trying to accomplish, whether it's a short-term rental, a long-term rental. Maybe it's that you're taking cash out after you've done rehab to the property. So let us know what your goal is, what your scenario is, and then we can try to find the best lender that has the best product and then get you the best rates and fees. Now, because these are non-qualified mortgages, they can do their own guidelines. So that's the reason that you want to make sure that you work with somebody that has experience, or if you're calling around lender to lender, which not all of them will work directly with a consumer like yourself. Many of them only work with brokers like myself. But for example, you're calling around, you need to make sure where you fall in. So for example, this is lender one. Their investor history, if you're an experienced investor, you must have owned a property for a minimum of 12 months within the most recent 36 months. Okay. They have ratio programs down to 0.75. They're prepayment penalty options. So they all have their own guidelines that they supply us, and each one's going to be slightly different. So lender two, this is the property types that they allow and the eligible properties that they allow. The minimum DSCR is 0.75. First time investors, it must be over 1. Their max loan to value is 75%. For 3 eligible property types, they're much more conservative as a lender. They have some of the best rates that I work with, but they only do single family homes or duplexes or triplexes or fourplexes or warrantable condominiums. They don't do condo hotels. They don't do non-warrantable condos. Okay, so you want to make sure, yes, the lender might be quoting you a great rate, but does your property fit their requirement? So with this lender, if you're a first-time investor, you have to have a credit score over 700. Other lenders, 660. For example, we're looking at 3 different lenders. I told you I work with over 100. The minimum DSCR for lender 1 is 0.75. Both the other lenders need 1 or greater. First-time investors are allowed. However, the first lender wants 660. The second lender also 660. The last lender is 700 or higher, 720 for some of their programs. The first lender allows condo hotels, and so does the second, but the third one does not. And then experienced investors is 12 owning a property 12 months in the previous 36 months. Lender 3, who's more conservative, yes, they have the best rates, but experienced investor is 12 owned a property 12 months in the previous 24 months, not 36 months. So if you're an experienced investor and you're used to it being every 36 months, well, this lender would be different, and so you would not qualify as an experienced investor. That's why if you're out there shopping, you're trying to find lenders on your own, you're not working through a broker, you may not get the right program for you. And yes, you're probably trying to shop for the best rate and fees for yourself, but it can be a very time-consuming process to save a little bit of money versus being able to go out there and find more properties that might be a better investment than trying to potentially get, an eighth off the interest rate or save a few $100s in fees. I'm not saying it's not worth your time. You just have to consider, the time value of money and just your opportunity cost when you're doing that. Now, the minimum ratio on DSCR with some lenders is a no ratio, and that just means that the lender doesn't care about the property's rental income cash flow. But because it's a riskier investment for them, they're going to require a larger down payment or a lower loan to value if it's a refinance, because it is a riskier deal to them. Most lenders start at 0.75, meaning that you're receiving $750 in rent for every $1,000 in housing payment. But obviously, most lenders would like to see at least 1-to-1 or greater to be able to start giving you some of their better terms. So the lowest credit score that I see lenders work with is 620. Most lenders require a 660 score. The ones that do offer 620, the maximum LTV is 75%. So that means if you're purchasing a property, you need to come in with 25% down. Now, I work with lenders that go down to $75,000 loan amount. That's not the purchase price, that's the loan amount. Okay, but most lenders, if you want to get the most amount of people to be able to try to get the best rate and fees and create competition, the lenders have a minimum loan amount of $150,000 or greater. Maximum loan amount for most lenders is $3 million. I have lenders that go up of tens of millions of dollars, especially if it's a commercial project. But I'm just showing you traditionally when we're talking about, single family or 1 to 4 units. Again, we have lenders that can go down to 15%. In most cases, in a high rate interest rate environment, these properties will not ratio. Okay, so even though they say that they can do 15% down, in reality, the property won't qualify in a lot of cases. Most lenders want a 20% down payment, and even in a high interest rate environment, it may or may not ratio depending on the loan size. So again, that's why it's important to work with somebody that could help you crunch the numbers and make sure that the property is going to be a good fit and that it should ratio, so you're not spending time, money, and energy on inspection costs. Maybe you're doing, is there mold in the property? You're having a plumber go out there, all these different people go out to the property and potentially charging you fees to be able to do so. You want to avoid doing that unless you feel like you have a property that's going to be able to fit all of these requirements and ratio. Talk about what's typical for a single family residential home that's being rented as a long-term lease. A long-term lease is going to be considered 12 months or greater. Most lenders are going to want a credit score of 660 or greater, a DSCR of 1-to-1 or better, a minimum down payment of 20%, 3 months reserves of the housing payment, which would include principal, interest, taxes, insurance, and association dues, and then the minimum loan amount being $150,000. Each scenario is different. What your long-term and short-term goals are different, and then every lender's risk tolerance is different. So if you want to be able to try to make sure that you're getting into the best loan program, that you're having all the options presented in front of you, and you're getting all of your questions answered, you can scan my QR code, schedule a consultation with me. We can go through all the numbers. I'll go through if I believe it'll ratio and why. Then at that point, you can decide if you want to go ahead and move forward with that property. If you have any scenarios that you want to send me to review, you can always email them to trevor@harborfunding.group, or you can give me a call or text me at 619-404-6637. I love working with investors, so even if you're a first-time investor and you just have the most generic, simple questions, don't worry. I've heard them before. I'll walk you through everything step by step. Or if you're an experienced investor and you're just kind of making sure that you're putting yourself into the best product, I'd love to be able to help you out. Subscribe to my channel. Watch the other videos that can show and explain how we calculate DSCR and some properties that we run through to show you how it would look and what the payments might look like.